Hi guys, you're welcome to today's commentary for the dollar. This is 19th of March 2025. If you're watching this, kindly in the comment section, engage in the comment section, type your name and where you're watching me from before we get started. Type your name and where you're watching me from. If you're hearing me, type your name in the comment section and where you're watching me from. We're about to do something very amazing this afternoon. You can share the link also with as many communities that you like to be a part of what we're doing. Please, you can share the link, share it in the groups that you belong to. James from Ghana, it's great connecting with you today. Keep typing in the comment section. All right, so this is the dollar index, and we're going to be looking at the higher time frame, because the higher time frame always is where the liquidity is residing. Remember, like I always emphasize, that when you're about to start trading, it's important that you start your day with studying the higher time frame order flow, the higher time frame market structure, especially on the monthly, the weekly, and the daily time frame. And today I'd just like us to take a look at the daily time frame for the dollar index, because the benchmark are set for all the dollar and dollar associated currency. And previously you would remember that we've been anticipating the dollar to drop into the dollar on liquidity residing lower alternatively reprice into internal range inefficiency, especially the inefficiency that's been created over the last 1 week. Right above here, we like to see the dollar mitigate all of that price delivery with at least 50% price mitigation your day with, and we were looking to see if the dollar can get into that internal range inefficiency. Just then we'll be looking to sell the dollar more because we are in a bearish market at the moment, but because we know the market is not a straight line curve, the market moves in waves. The market moves from external to internal range liquidity and from internal to external range liquidity. Okay, so because we do know that, we will rather patiently wait to allow the dollar breathe in and gather more momentum to deliver price in the direction of the order flow, either to the downside or to the upside. But in this case, we are in a bearish structure, and the daily time frame here just did something very powerful. Remember, during my analysis on Sunday, I said something. Was it on Sunday or Saturday? I mentioned that I would like to see two things happen, especially from the daily time frame. I would like to see either the daily time frame takes out the previous week's low just then and create market structure. Then we're going to buy the dollar into internal range, and then we look to sell the dollar into the next draw on liquidity. And currently we see the dollar reacting off that previous, previous bearish orders here. At the bearish order block that was violated here, price action has traded right back into that old high by the left, and price just took out the previous week's low. Yesterday, Tuesday, we took out that external range low because yesterday we were bearish. We anticipated price to sell from the bearish order block on the daily time frame there, and we sold into the external range low right there. And today we see the 1 hour time frame created shift in market structure bullish. This technically just tells me that we're about to start buying the dollar into the internal range, like we've that external range low, because we're about to start buying the dollar like we anticipated into the internal range, because you see the 1 hour took out previous week's low, that low of the last week's price action on Tuesday. We traded right below that to take our liquidity, and what do you see? We have a shifting market structure bullish. You may want to take out the candle wicks for clarity, and so you know exactly what I'm talking about. This is the 1 hour, and you can see clearly that we have a shifting market structure bullish right there. All right, that's the reason for the dollar pump to the upside. So we had shifting market structure bullish right there. You may want to ignore the candle wicks. You may want to use the candle wicks to mark structure, but the candle body, of course, to identify shifting market structure, exactly where the candle body closed above, and at the same time we see price action created a bullish propulsion candle. You see that bullish order block here. Price action traded back into the bullish order block and created another bullish order block. That second order block is the propulsion candle, and usually when we're buying, we mention we don't want to see price trade in below 50% of the propulsion candle right there. So price traded into that order block, and that's a buy on the dollar, and we're looking at the relative equal highs right above that level right there. The relative equal highs there, that's where we're looking to see the dollar trade into that level, and ultimately the inefficiency, like we emphasize on the daily time frame, we want to see it mitigate at least 50% of the entire price range that was created within the last 2 weeks. Okay, so this is that about the dollar. Let's quickly take a look into the GBP JPY. Like we projected during the week, we anticipated price to draw into the buy side, drawn liquidity residing above, and of course we caught our first trade, which delivered into the take profit. Let's take a look at the daily time frame. So this is the daily time frame. That trade traded into that buy side liquidity pool residing above the relative equal high right there. If you look at it from the 1 hour, price action traded into the take profit, and it's another time to reprice into internal range because we've taken out external range, expansion higher. Where is the next? If you measure between the low to the high, price took out the relative sell side liquidity pool residing in the intraday, so that, and traded into that IOFED, institutional order flow entry drill, the fair value gap with an old wick in between. That is the buy right there. Price traded into that, and that's a buy on GBP JPY. And we're expanding. We're looking to expand right into the drawn liquidity right above that. So we're bullish on GBP JPY. Then on gold, let's quickly take a look at gold. Gold has been bullish, bullish, bullish. And if you take a look at gold from the lower time frame, you should be able to catch some trade entries on gold. Gold has been delivering actually. Right here, you see gold create sweet entries using the proportion candles. Gold created bullish order block on the 15 minutes time frame on Tuesday, created another one. The second order block is the proportion candle. You see how price traded into that proportion candle, respected that, and we had an expansion higher. Okay, again we had a bullish order block there. Price traded into the bullish order block with the fair value gap right there, and created another bullish order block. That is the proportion candle. We traded into it, and what do you see? Boom, expansion higher. Again, you could say this is bullish order block. The second bullish order block that was created after a tap into that becomes a proportion candle. We tapped into it. That's an entry, and we are repricing 15 minutes time frame rather. We had a shifting market structure bearish. Okay, gold right here after taking out the buy side liquidity. Above all of that, gold created shifting market structure bearish, and those of you who trade intraday, you must have caught a sell during the New York session when gold traded back into the bearish order block right there. You see that into that bearish order block right there. You must have gotten a sell right at the bearish order block, and gold delivered about 1:3 on the 5 minutes time frame. You're going to see the entry there. The bearish order block had a fair value gap attached to it. Remember, the most valid order block is the one that has a fair value gap attached to it. This is also an optimal trade entry between this entire range that happened during the London session. It's called the OTE pattern. OTE pattern. The OTE pattern is usually a strategy that we use in trading the New York session. It's usually for New York session. We measure the entire range that was created during the London session, and we wait for price to trade into at least 62 to 79% of Fibonacci retracement levels, confluencing the Fibo levels with institutional reference point, with reasonable institutional reference points, and we sell when price trades into a premium market, which we see here. It happened. Price created that expansion during the London, and during the New York, price traded back. You see that time, 8:40 New York Standard Time. That is New York session. Price traded back into the bearish order block with a fair value gap right here. That is a sell, and you must have gotten some price being delivered. Okay, I still want to see gold reprice low, at least today and tomorrow. So as gold is pricing higher, I like it. I like to see it take out the buy side liquidity residing above this high. This is a bearish order block. I'll be looking to still sell more at the bearish order block into the external range liquidity. That old low right there on gold. Okay, my friends, I just said let me come up and do one or two things with you guys right in here. Today I've been busy. I had a very busy day on transit, but I think with what I've showed you guys, you can use that, and with what you know from the mentorship, you can use that profitably to your favor if you know what you're doing. Okay, if you have questions, please do well to ask a few questions. Let me see how I can answer them. Just type your questions in the comments, let me go through, and the ones that I can answer, I'm going to attend to them. The rest that I can't, I'm just going to let it slide. Then today I'm giving out a slight discount to join in my one-on-one mentorship program only for today. If you're looking to join the one-on-one mentorship program, just check the link on the description of this live session. You're going to see a link for mentorship. You reach out and you're going to get a discount to sign up for the one-on-one mentorship program only today. Okay, only today. Then those of you who've been asking me for a broker to fund, please check the link on the description of the video. There's a link on your trading account. Please, let's start trading. It's better to trade a small account. To keep trading on demo account, it's affecting your psychology. You're not getting any better trading that demo again and again. You need to have live market experience. Enough of demo, get live this time around. Okay, and so in the absence of any question, I think we may call it a day. And I'll see you guys tomorrow. Till next time, I wish you good luck, good trading, stay safe.